For those of us who live and breathe crypto, Bitwise is a name you want to know. They've been in the game since 2017 and now manage over 10 billion in crypto assets across 30 different solutions. Index funds, Bitcoin and crypto, equity ETFs, on-chain solutions, you name it, Bitwise does it. But here's what I really recommend checking out. Their weekly CIO memo. Every week, CIO Matt Hogan breaks down what's happening in crypto, like why Bitcoin's up or down, what the big institutions are doing, and the stories flying under the radar. It's sharp, it's free, and honestly, it's one of the best reads in crypto. Find it at bitwiseinvestments.com/CIO memo. Again, bitwiseinvestments.com/CIO memo. Hello, everyone. We are back again for another episode of REKT Vision. It's Friday, and as is per tradition, the market is dumping once again. It's been a pretty horrific week across the board in crypto. Sometimes I feel like I'm getting wheeled out in front of you guys to face the music, so to speak. But we've got Spencer back on again today. I think where was everything last time you came on? I think Bitcoin was comfortably above
higher.
Yeah. ETH was probably above 4K. Solana was above 200 maybe, or near 200. It's all turned south very, very quickly this week, but it's good to have you back on, and we'll go through everything that's going on in the market.
Thank you for having me, Mando. Yeah, I think you fun and exciting moment to have picked, but I think you don't exist in crypto in a professional capacity to not like expect these moments, live for these moments, and think about these moments. So, they come. They've always been coming. It's not the first crash. It won't be the last crash. And this is why we got to come on and talk about it, because that's how you really prepare and think in these moments. I think a lot of people make some of their best decisions during crashes and some of their worst decisions during crashes. And so I think that's really relevant for us to kind of have a conversation around.
I agree with that. Sometimes I think it's very easy to be very insular during moments like this. And actually, I've made some of my best trades for sure. When the market gets like this, it gets choppy. It can be a lot to face mentally. But I do think it's obviously a period of opportunity given the moves that are happening. Let me just get your pulse on the market here a little bit. Like, obviously, we've seen Bitcoin have a pretty torrid week. We hit 80K actually at one stage this morning. We're now around 83K. This time last week, we were just kind of breaking below the 50-week moving average. We were in the high 90s or mid 90s, let's say. And there was maybe a light hope that we could maybe have a rally into the end of last week, but that failed to materialize. And when that didn't materialize, I think the rest of the market just really dumped. We had ETH fall through a few key support levels, and people getting very worried about the DAT trade, which we'll get into later. But overall, how does this feel like to you as in the market?
So weirdly enough, like there's a little bit, I don't want to say silver lining here because it's obviously kind of bad, but like at least stocks are also doing poorly. Like the thing that was really concerning over the last couple of weeks was when like crypto was doing poorly and stocks were doing great. Like that is to me more concerning than like stocks doing poorly and crypto doing poorly at the same time. Like I think it's a really, really like you can explain for macroeconomic reasons kind of what's going on here. I think the more concerning thing in the past was like, why is only crypto going down, right? We know that ever since these ETFs and the public markets have mattered, that Bitcoin and ETH have been a lot more correlated to the public markets than they had been in the past. And I think that made sense because it's kind of the same people trading them. But I think like really at this moment, you have to think like two things. One is like, is this the end of the cycle? And two, where is the bottom in this bear market? Because it's certainly higher, right? Like you also got to step back and like realize how much progress was made this year. Like I don't think we see $17,000 Bitcoin ever again. This is my personal opinion, obviously not a guarantee, but does that mean we don't see $70,000 Bitcoin ever again? Does that mean we don't see 50,000? I don't know, but like that's I think a really important when I talk to people about like them building their strategy for this leg of the market. I think one of the most important variables you as a trader need to find within yourself is what do you think the bottom of Bitcoin is in the lowest point of the trough of a bear market here. I think that's a very important variable because it will define where you think we are in this. Like, is this the beginning of the crash? Is this the crash? Is this a blip because we've had some weird like rate stuff going on? Like, what is this, right? I think that's the big question.
Yeah, I think maybe let's do that a little bit, because people have been hypothesizing a lot this week, like what has actually happened. Now, before, when it was just crypto selling off, it felt like this was some sort of an extension of the big wipeout that we had on the 10th of October, where maybe we were going to find a few bodies float to the water, maybe market makers, maybe a mixture of both, really. They had caused more damage than we had thought, and that had continued. We had some people like Tom Lee go on CNBC this week, basically say something along those lines. We'd had the 4-year cycle, just Bitcoin OGs coming through and selling billions and billions of dollars worth. That was a big reality. Like we've been seeing that for like 3 or 4 months. And if this was the top, it does almost perfectly coincide with that 4-year cycle, which would have happened in the first or second week of October. That's something I was completely wrong on. Obviously, I thought we would kind of continue, but that has been a very, very strong factor, I feel like. And then thirdly is this idea that we're selling off maybe before macro starts to sell off, and that crypto is just the first thing to start showing some weakness. That one has gathered a bit more pace this week, just because AI has looked particularly shaky. We had Nvidia results midweek, but the market didn't really. Well, Nvidia bounced on the day and then kind of reversed, and then the AI/QQQ stocks are all heading back lower again right now. Do you have a strong view on any of those? Do you think it's just like a mixture of both? Or all of them even?
Here's what I think is going on. If I were to read this, is like, I think there's a lot of extra skittishness in the market around crypto, because there's this feeling of like, okay, the ETFs brought a lot of volume in, the DATs brought a lot of volume in. We kind of know the DATs are going to start unwinding. Like that's already kind of starting. I know you kind of hinted at that. But they're not really as major of a catalyst as the ETFs were. And so the question is like one of the sub questions of like how low would we go is like, people who are on CT and like crypto full time. Like I remember in prior bear markets, it's like people didn't sell their ETH because to them ETH was money, right? Like this is very much not the case of the people who hold a little bit of Bitcoin in an ETF in their trading account, right? In their on Robinhood, in their retirement account. The question is like, how sticky is that bid, or is this going to be really flighty money, right? I think that what we see is like, for the S&P, right? Yes, when the markets are bad, the S&P goes down, but like a lot of the structural bid on the S&P is like, here is my retirement account that's 100% allocated to the S&P, and I don't even know how I could take it out of that if I wanted to, right? Like this is a bid that is very, very sticky. The question is, we don't really know what the composition of the bid that comes through the ETFs is. The ETFs themselves aren't really a bid, right? Like it's underlying people buying the ETFs and then they buy them. It's not the company who issues the ETF deciding they want to have a certain AUM of crypto. And because of that, like, we don't know what the composition is. How much of it is retirement accounts? How much of it is like random degenerates just trading stuff? Like, I think what we're going to really want to pay attention to is like, what is the outflow from the ETFs over this period of time when the market looks rough? And I think what the forward action of Bitcoin signals to me is that Wall Street it feels as though there will be a big unwinding here, right? Now, is that true or not? I don't know. If it doesn't come to fruition, I think we will see a really bullish narrative develop there. But this is a big question to me, is like, basically during the whole time of the ETFs, crypto's been kind of up only, right? And so we haven't really seen what happens in this bear market will be the first bear market that happens with the ETFs being a major player. And they could compound it, they could soften it. I don't know. We don't know that impact yet, but that's what we should be keeping a really close eye on, right? Like obviously to me, it's obvious that when Bitcoin goes down, we should see outflows from the ETF. And when Bitcoin goes up, we should see inflows to the ETFs. I think that should generally be true. And it's funny because like that's probably the opposite of what you should be doing. But like there's a reason that everyone sells on the way down and buys on the way up. Like as a trader, you should do the opposite. But like you should do the opposite because everyone else does that, right? And so the fundamental like motion of the market is people selling on the way down and buying on the way up. That's why it's going down and why it's going up, right? And so how does the ETF flow impact that? Or are the ETFs just going to sit around the AUMs they sit right now? I don't know.
Yeah. Look, obviously some of the ETF data is slightly backward looking, obviously, or at least by a day. So you kind of get this slightly warped sense of like, on bad days, it looks like they're always going to continue. I I think that the buyer base has largely gotten stronger, in my opinion. At least I think it's gone more into longer term hands than pure retail of what crypto was before. I continue to think that. So I do think we have a stronger buyer base, or at least a more longer term buyer base, which I don't think is going to lead to huge outflows, but we have had some. Like I think we had in the like 2 billion plus outflows over the last week, which has been across all the different ETF products, which hasn't been a great sign. Part of that as well, though, I think is the basis trade slightly unwinding as a lot of those funding rates go quite a lot more negative. So I agree with you. Do TradFi continue to buy in weakness? Like traditionally, when you see stocks fall aggressively, money comes into funds like that because they like to buy the dip. With crypto, I guess we're going to find out if people only like it when it's rallying. You know what I mean? Like the momentum in crypto, I think is a bit more than necessarily in stocks. There's less value investing than there is momentum based investing. But this week I have been a little bit more worried that stocks, at least some of the AI stocks, are not acting that healthily. Like we saw pretty good results there from Nvidia, in my opinion, and the market didn't like them. So it makes me think that it's gonna. I just don't really know what gets that AI trade like back being as strong as it was. I think we almost like need a wobble to really believe in it again. Do you know what I mean? And so I would be unsurprised if stocks continue to head more south here. I do think that Bitcoin is starting to look like it's been beaten up too much. Like it's really gotten hammered from 123K now down to 80 that was this morning, still at 83. But all the RSI indicators are indicating that this is very oversold, like the most oversold it's been, or close to the most oversold it's ever been. So we are really getting there. And no one can really point their finger other than Michael Saylor or DATS. It's more just this doesn't feel so good right now. So I kind of feel like Bitcoin might start to outperform here, but outperform, I would be unsurprised if now stocks have become the reason why the market suddenly feels a little bit more shaky across the board. This stock sell-off has only really been happening in the last week to 2 weeks, you might say. And my guess is
because outperform might mean it is still going down. It is just going down less than stocks are, right? Like there's still outperformance of Bitcoin. But and also
we've had periods before.
Yeah, I mean, I also agree. Like it does feel oversold, right? Like I think that, but again, like I think the bullish sentiment is that like a good amount of this run was TradFi really leaning in. Like I think Circle IPO to me, if I look back in the last 18 months, like that's probably the thing that brought in the most marginal money to crypto because it was so successful. Like that's what sparked the whole DAT run, all these kind of other things. And so like, that there's like there's a few big players who had a trade on that was like, we know the ETFs are happening. We see the DAT thing happening. We're going to buy a bunch of Bitcoin, and like, we don't have this long-term thesis on it, but like we are executing a trade and there's no more like very obvious catalyst. The DATs are unwinding. There aren't like strong IPOs in the horizon, likely at this point, given the price action, all those kind of things. And like, it wouldn't take that many big players who had these sort of like shady secret positions to unwind a couple of them. Where like, the question is, do they, especially if they accumulated them like pre-Trump election, right? Like, this is a reasonable point for some people with very large positions that they're up a lot on to just kind of unwind and take profits, right? Especially if they're bearish macro and all those kind of things. And when it comes to the AI trade, I think really one of the biggest challenges to AI that I'm hearing from my Silicon Valley friends is like the AI run is not only in the public markets. These private market valuations are really crazy for a lot of these AI companies. And a lot of the public market run is all the money that comes through like private market fundraisers, raising a couple $1 billion at a $50 billion market cap valuation pre-revenue is like a thing that keeps happening in Silicon Valley and these AI companies. All that money that they fundraise basically goes to the public companies to buy the processing power. And that is what fuels this run. I think we're seeing a really big slowdown in those sort of funding rounds, just because like the big catalyst that everyone's waiting on is like, what of these private companies that have raised crazy amounts of money actually go public and have a liquidity event for their investors, right? Where those investors can go back and raise more capital. I think that like a major catalyst that I don't, is on some time horizon, probably not soon, is like, does Cursor go public, right? A Cursor IPO would bring a lot of steam back into a lot of this, because all these AI funds would then have, DPI back to their investors, be able to raise more capital, those kind of things. But short of that, it's kind of challenging. I think that's been a challenge in crypto this cycle, is like the liquid funds generally underperformed and have had trouble raising, and that's why we haven't had this alt season that people are wanting. I don't know if it's as relevant to the price of Bitcoin, because they're not really the marginal bid on Bitcoin, but like that is one of the hallmarks of like interestingness this cycle in crypto. And I think we see a lot of like the like frontier money that would have gone to crypto in prior cycles going to AI this cycle, but it's going to these private companies that are fueling these large purchases. And the view right now in the Valley is like that free flow of capital where you can raise any amount of money at any valuation is coming to an end. And that means that like suddenly all of these AI companies have a defined distance of runway. It's been very
heavily
heavily
about free cash flow suddenly.
Yeah, exactly.
Yeah, look, I think part of what I agree with what you just said was that one of the reasons why I think we might outperform is just that stocks have outperformed so much this year, and there's only a finite number of, let's say, capital going into riskier things. So the idea that you would chase AI over crypto has definitely been a strong narrative this year. If the AI trade does show signs of softening, or at least just being brought down to earth slightly, then I think that's, again, why crypto might feel a little bit better. But it's tough to know that right now. If we do see a drop in the Mag 7, that is such a big bit of global assets, let's say, that I do think it can have. It's very difficult to work out if that's going to be good or bad for crypto. I do think that the first move of that could be that we show some weakness, and then we bounce from it. In general, in these sort of markets, though, like once we started breaking this sort of structure, I find it difficult to catching a falling knife is just not something that I ever really like doing, because it's very psychological. Like, oh, it will never go below this level, and then that level is often very arbitrary. It's like it's just a level in your head that you're like, okay, this is going to be my level where I'm going to buy it. So I'd much rather wait to see consolidation and like that we start to break out necessarily to the upside now, which I still haven't seen. Like this week has been horrific. We've had every single attempt to even rally has just been smashed back lower. We kind of hit a new low, and then we just kind of hang out at that low. It still feels like every bounce at the moment is not really being respected, even with Bitcoin getting hammered this hard. Interestingly, Bitcoin dominance has not gone up during this move as well. Like Bitcoin dominance has actually gone slightly down, I think, even on the week. It's been Bitcoin that has been one of the weaker things than just everything else. Altcoins have obviously been weak, but it's normally during a traditional bear, you'd see Bitcoin dominance head back up again. And that hasn't really happened, which makes me think that it's either worries specifically around MicroStrategy or Bitcoin DATs, or it's something like a big fund has had to start liquidating Bitcoin after 1010, and there's some sort of body that we don't really know about so far. Have you got any thoughts on that? Just like why Bitcoin might be as weak as everything else? Like it still has. I mean,
like, but if you look like ETH is also pretty weak and Solana is also pretty weak, which is also one of the more surprising things about Bitcoin dominance, because usually like Bitcoin dominance goes down when like ETH outperforms against it, but it hasn't really been doing that, right? Like I think these charts all kind of look the same. I think part of it is just like how we calculate Bitcoin dominance. I think we had a cycle where there was a lot of low float, high FDV tokens. And so like we actually they just won't go down because they can't, because there isn't actual like token on the market to sell for them. And so I would take that with a little bit of a grain of salt in this case. I also think though, last cycle, to me, it was really obvious. Like the bottom was like, okay, the FTX collapse is like, this is like either the industry's over or this is like the bottom, right? Like there was a very obvious, like huge external event. And I think, when you keep saying is like, oh, there's a body somewhere, there's a single fund that's selling, like these kind of things. I'm just not sold on that thesis. Like in crypto, we're just very accustomed to giant blowups that are very acute and them being these huge buying opportunities. And I like that might still happen. Like there might be people who blow up, but like a very odd part of this cycle has been the lack of major blowups kind of since Silicon Valley Bank, right? That to me was the last like really major one. We've had a few exploits and those kind of things here and there, but like we don't have like the FTX blow up was an existential risk to the entire industry, right? I think some people are looking to like the October 10th, 11th liquidation cascade as like also an existential risk to the company. But at the end of the day, it's not the company, it's existential risk to like the industry. Um, but like at the end of the day, I think we may just have to sit in the thing that public markets sit in, which is it's not necessarily a single event that causes the buying opportunity here or the bottom. It's like really a more kind of holistic thing that's going on. Um, I think that's kind of an odd part about what's happening right now is this feeling of dread of like it somehow feels much worse to not know why everything is going down in price than it did to be like, all right, the like second largest exchange stole billions of dollars and now isn't sending people money out of them. That's why price is going down. Like this makes sense, right? Like that was a very like you didn't have to think too hard to understand it. I think the not knowing here is what's causing a lot of psychological stress on a lot of people in the market. Like, I also do think like we shouldn't dismiss the impact of that liquidation cascade on a lot of folk. Like it seems to me every week I'm meeting a friend who like was farming Aster or something with some sort of large size, maybe a delta neutral trade, and like started to see the volatility and added all their stable coins as margin and then just got their whole port blown up. Like a lot of people who I consider very good traders who did that in October. And I think like that not only like liquidity suck, but even those who didn't put their whole port in as margin, like just the mental drain on a lot of people, it's taxing, right? I think that's something we don't talk enough about.
So you might be right. Like I agree with you that previous cycles have always coincided with like a big blow up, and this could have just been a lot of mini ones, basically, like a lot of large traders who are now not really looking to bid as we've headed lower. And obviously these things are always like they gain a narrative ex post almost like, oh, that was the reason why it happened. The most obvious one is still the 4-year cycle thing, in my opinion, that we had a lot of people coming in and just selling, and you have to digest that, and sometimes it's just too much to digest. And
well, but like that's like the most bullish argument, right? Because like if we're selling right now because everyone's like, oh, it's the 4-year cycle, time to sell, like then that's like a very finite amount of selling, right? Like that's people like that should end over a set time horizon. So like the optimistic case here is like the market's just kind of weird. No one really knows where it's going. This is what I hear from all the TradFi people, right? Is like the market's just very weirder than it's ever been. There's no clear kind of thing going on, right? 4-year cycle folks are like, oh, it's October, I'm out. They're selling their coins, and then like any major positive catalyst like sends it like crazy, right? Like that's the like very bullish view on the market right now is like that selling is happening because people think it's the end of the 4-year cycle. When those people stop selling, we're primed for like a crazy run if given the right catalysts.
That was my narrative, actually. Even as we broke down that, the 4-year cycle, if that was the case, that it was very bullish, and that because we wouldn't have a blow up of some sort, that would be finite, and we'd have some sort of a Santa rally until the end of the year. Then we started to break through some of the longer term trend momentum, and then stocks have started to sell off too. So I'm less certain now. Like I just feel it's still slightly perplexing picture. Are you worried about any of the DATs? Like we've had a lot of focus on MicroStrategy this week. It looks like there's a report out that they may be excluded from the MSCI indexes just because they're being seen more as a treasury company rather than operating company. There's been worry about obviously MicroStrategy and now have been heading lower for a while. And yeah, just general worries about that situation. And this is alongside, obviously, Tom Lee is now down something like $3 billion at BitMine of unrealized losses on the ETH position, alongside pretty much every major ETH DAT. It feels as though some of those DAT traders look like they've got a lot of egg on their face. Do you think that's going to, like, that has any sort of ending which is not bad, let's say?
I mean, okay, I think like generally, and you're more of a MicroStrategy expert than I am. So like, I think generally like like MicroStrategy is structured really different than all the other companies. So then you have to think about it in a different bucket. So I'm going to talk about the non-MicroStrategy ones, where I think like so basically if the DATs are trading under MNAV, it makes sense they should sell some of their assets to buy back their own stock to repeg themselves, right? The question is, how far under MNAV do they need to be trading to do that? And then like once that narrative is established, like the hope is you don't have to do that with a lot, right? The hope is like you do that one time and everyone's like, oh, then they're going to do it. And so like maybe like there's just a bid that comes in that's like, I should buy this because like in the worst case, they'll just buy it from me and there's an arb there, right? Like when does that kind of come in? I would very strongly, like I have very strongly been advocating and looking at, like, I think there's a point, like if you see like an Ethereum DAT 40% under MNAV, like I think you probably like 40, 50% under, like that's a very easy bid to me, because like they can just sell and buy, and that probably means they must sell and buy, right? So like, what is that number and how far depeg can they get? I don't know. The real thing is like, when are they going to go over MNAV? Like, I see no argument for them to go over MNAV anytime soon, right? Like that was the whole thing that made DATs work, was that they were trading over MNAV, which was ridiculous, and we knew was going to unwind at some point. I think that the other thing that we will start to see unwinding on some of the smaller ones is like they do have annual costs to run a public company. Like they will need to sell just to do that, and that will cause their MNAV to go down because they have to sell off their balance sheet for something other than repurchase of their own stock. The other thing is like the really scary ones are the ones that are tokens that are not, like, okay, like if Bitmine wanted to sell $3 billion of ETH, like there's a bid for $3 billion of ETH, right? There are tokens for companies that do not have bids of the size of the DATs. And there is not the ability to sell them to rebid themselves. And that's going to be a mess. Because like, how do you even unwind that? Like, even if you wanted to, where I think we see a lot of the existential questions, I think we will see a lot of these companies get delisted from the market. I think that's a cascade that's coming. And the question is what happens to them when they're private, because it's not as simple then as like sell the assets, rebuy. So like, is them getting delisted bullish or bearish? I don't know, but like there is definitely an unwinding here that must happen. And they certainly aren't raising more money or purchasing more of things. That being said, like there is it almost reminds me of like of Grayscale Bitcoin, GBTC, when it depegged, where like there was a great trade where if you just bought depegged GBTC, like great. This is not quite the same thing, but in some cases it might be. Like there is a certain amount of depegging or under MNAV that just is super juicy.
Yeah, I haven't seen that many trade like really far below MNAV. They're just like below MNAV. I think most of them are like 0.9-ish or 0.8-ish. It's not like 0.6.
Right.
And we have seen this week, we've seen a couple come in. There was one yesterday that sold, I think, something like 11,000 ETH. So some decent sales going through already. But it's more that ETH, in my opinion, is the most exposed to this, just because it had the biggest run up on the back of the stat trade. This was the buyer of ETH from 1,500. Tom Lee was driving this, the marketing and the bid, really, and that has now shifted. And if that even somewhat shifts now to the downside, an unwinding of that, I think is pretty worrying. I think it's more of an ETH thing, though. That's what I think.
Do you think it also touches Solana, or do you think it's just ETH?
Well, Solana is definitely not trading that well either, and does have some DATs, but I don't think it's got the same percentage of supply in its DATs. I don't know. I think that was a little bit remains to be kind of seen. The main Sol DATs are also pretty Solana aligned. It's guys like Carl Samani and a couple of others. So you would like to think that maybe they'd be a bit more. They wouldn't do stuff like that. It feels like they wouldn't turn around and just start dumping Solana. But I think the market is going to try and test this. Basically, that's where that's where I think right now.
But something that I think is inherent to what you just said, which maybe I disagree with a little bit, is like I actually think the most Solana aligned thing they could do is sell a little bit now to repeg MNAV, because like what you want to do is signal to the market that you're willing to do that, so that you have to do it as little times as possible, because the market will do it for you. to close the
Mm.
arb, right? Like I think that waiting and being uncertain if you're ever going to sell off the balance sheet to rebuy stock is actually quite bearish, because I would be much more comfortable bidding and closing arbs on companies that have indicated they will do small repurchasing events versus ones who won't.
Maybe that's the case. I still think if Tom Lee turned around and started selling ETH, it would be yeah, maybe it would be a initial move down, but then maybe it would be a almost stabilizing sort of move from there. But like if MicroStrategy did that as well, like you can imagine the headlines. It would be, I don't know if it'd be a loss of faith, but it would just really be, I think it'd be a bit scary there for a minute there if that started happening. But maybe it's something that they have to try and do, show that they can do it, because it feels like right now the market is part of the narrative is it's going to test these stats. It's going to test. There's a lot of feeling of like, what is Saylor going to do? What is Tom Lee going to do? And maybe just doing it a small amount might just satiate everyone to say, look, we'll do it when we need to, basically, like you said.
Yeah, I mean, look, I would prefer 10% under MNAV having sold a little bit of ETH to 20% under MNAV having sold non-ETH. Like that to me is a preferable scenario, but I agree that like none of these scenarios are good. Like,
Not as good as they once were. Let's put it that way. The other thing that's been going on this week is like macro picture has been evolving slightly as well. Like we've had a lot of weakness in Japan, which people have continued to say is a ticking time bomb for, but they've been saying that for decades around the debt situation there. But we had the Fed also kind of going back and forth over this rate cut potentially for next month. And that has slightly spooked markets. We were selling off hard
significantly
until
spooked markets.
Yeah, we were selling off pretty hard until the Fed's, I think it's Williams maybe or Waller, came out today and said, "Look, I think we could have a rate cut near term," and then the market bounced somewhat. I think we're having a little bit of a bounce even right now as we speak. But do you think that is going to be a turning point here for the market? It has seemingly that decision is swinging pretty wildly on things like Polymarket at the moment. It was 50-50, then it was down to like 20. Then after the comments today, it was up to 70% that they are going to cut rates.
Yeah, I mean, I think this is like the thing that matters, right? Like, if as we're saying, it seems like stocks matter a lot to crypto right now. Stocks could be a big risk to crypto right now. And like, I can't remember the last time it was this unclear, right? Like, usually this is like 80-20 or like 90-10, like, because this is just the odds over time for this particular rate cut, right? Not like, like what are past rate cuts? Like, usually, you correct me if I'm wrong, but usually they're not this close. Like 50-50 is pretty crazy, right? Like usually it's pretty consensus. I mean, the Fed gives forward guidance for a reason. Like this is the most confusing one. Now, the good thing about that is it means neither direction is priced in, right? So it means that if we do get a rate cut, that will actually run, right? It wasn't priced in. Many rate cuts that we've gotten are entirely priced in because everyone knew they were coming. And it's like, how much of a rate cut will we get? Like versus is there a rate cut at all? And like it's usually pretty consensus, and the consensus is usually correct, right? We haven't had a surprising outcome in a very long time, and we're basically guaranteed a surprising outcome here because all outcomes are surprising.
Yeah, I think the resolution. You're right, and that market does not like uncertainty. This has surprised me too, that the Fed hasn't. I think part of it is the lack of data because from the government shutdown, so they've been a bit more coy about things. Part of it is obviously we had a strong jobs figure, for example, yesterday, which again spooked the market because it felt like we weren't going to have a rate cut. So parts of the data have been slightly contradictory. So it does feel a bit more in the balance, but you would like to see them be way more clear at this stage. So maybe we will see something from the Fed, at least in the next week, that will give us a bit more clarity. I think the market would like that. The market really does not like this sort of uncertainty. So maybe it's just all these sort of things. Like, is there anything? So right now in the market, what are you feeling? Are you looking for levels to buy Bitcoin? Are you out of the market? Are you all in and just waiting for the bounce? Like, what's your view here?
Yeah, so I mean, like I am doing two things. One is like I think this is so this is not the best time, but throughout this year, like I would say, like just kind of being ready to reallocate your portfolio, right? Like I'm looking at things and being like, all right, old narrative, like in uncertainty, old narratives kind of like don't matter as much, right? And so what I would say is you thinking two things. Is this the bottom? And if it is the bottom, what am I buying? I think those are really important, right? Like, what am I nibbling at? What am I chomping on? What am I looking for? I think, for example, there's a few ways you can play this. One is like if there's no rate cut at the next Fed meeting, I think I'm deploying pretty aggressively into no rate cut at the next Fed meeting because that seems like a catastrophic event, right? If there is a rate cut at the next Fed meeting, I think the question is like, how long does sort of like exuberance around that last, et cetera? Like I might be looking at that bounce to like cut some positions, and I'm less happy that like a position that I wouldn't have bought on the dip is a position that I feel I should cut on a bounce, right? And so anything that I'm still holding that like in the world where there is this rate cut that wasn't priced in and we go higher, like you should probably be reallocating to either cash or the things that you would have bought in a dip, right? Those are the two things that I think make sense there. If you wouldn't have bought it in a dip, there's no reason you should be holding it. So I think that those are really, really relevant. I also think that, especially in crypto, like one of the biggest questions for the next unit of time is some of the biggest tokens coming up are all new L1s. Like a lot of money is in the mega ETH pre-sale. Like a lot of money is in, the Monad pre-sale. Like these two things, which like, they're great companies. Like, do we need more L1s? Is this the thing that matters? I don't know. Like a lot of the money in our industry is kind of in those two things. I think not only the rate cuts, but like, do those two TGEs go well matters a lot to the industry. I think there's a point if AI tech stocks truly collapse, there's definitely a point in which you should bid them. Like, I don't think Nvidia is going away. I think it might be overvalued right now, but like, it's not unreasonably so. I think I'm a little hesitant to bid ETH. I think Solana is probably going to be oversold on this run. I think like I would sooner bid marginal Solana than marginal ETH, just because I think there's a more active growth effort that makes sense there. But the other thing that I'd be looking for is like, what is a new meta? Like we feel really ripe for like the whole thing this year has been like, who's going to get a DAT and or what low float high FDV L1 is launching, right? Like those are the two things that kind of matter this cycle. And I just think that we're really ripe for a new meta to develop that is very meaningful, that has a whole sort of like system and running around it, right? Like Solana is relevant because there was an entire section, like several months of the market where the only thing that mattered was Solana meme coins, right? Like a lot of the L1s are relevant because all of the ETFs are so far have been for these L1s, right? And seems to be what retail likes. Like there was a period of time where ordinals was relevant. Like I think that we're ready for a new primitive or a new meta to kind of come out that like it catches a lot of people off sides very substantially.
What have you been thinking? What do you think about that? Like, it's been difficult because I think that has been slightly slowed during this period. We've seen a lot of TradFi adoption. So most of the new things I see are around that. But is there anything you've been looking at which you think could be that, or you think it's going to be like an unknown that catches everyone out?
I mean, like obviously I have my own opinions on this, which inform a lot of like how I operate, which is like I think that there was a lot of exuberance from TradFi. I think a lot of TradFi exuberance has dampened because of how the DATs are playing out. But I think that again, like my read on this cycle is the most important thing that happened was the Circle IPO. Like I will die on this hill. I think that companies that are more palatable to TradFi that come out of crypto will matter a lot. This is why we see like a lot of these stablecoin companies are the thing that they like the most, but we don't see an on-chain run on any assets there because they're not like the stablecoin doesn't become worth more. Like you don't see the effect of TradFi really loving stablecoins because it's very digestible to them. I think like real revenue companies is a thing that will matter because like everyone in TradFi is used to reading earnings reports. Like that to me matters a lot. I don't think we see many companies in crypto that have real revenue that isn't from trading fees. I think like that's a general thesis of mine. But we'll have to see, right? Like we'll have to see what could get TradFi excited, or is there a different marginal bid besides TradFi? I think those are the two questions. I would be much more long something non-stable coin that is a use case that gets TradFi excited and they become a bid on than I would be other pockets of liquidity entering crypto, because I think we just haven't seen that. Like the most staggering thing to me this cycle is the lack of user growth on exchanges. Like I think call a spade, that's the most like interesting thing is in past cycles when crypto spikes, like we see exchanges become more and more relevant, and that just super didn't happen this cycle.
Mm. One thing that has been is prediction markets. You saw Polymarket and Kalshi both going toe to toe again this week. Both talking about, I think Kalshi raised today at, was it $12 billion? Something along those lines. And I think Polymarket is in talks to raise around the same sort of level. That feels like it could be the thing, at least. I know Kalshi is maybe less crypto centric than at least Polymarket is, but it does feel like that's been the one spot of crypto where they are just not paying attention to what is going on in the rest of crypto.
I think there's a very a very binary outcome here, which is like both Kalshi and Polymarket are really playing with a lot of kind of legally gray areas in the United States. And so the question is, can either of them TGE prior to any sort of like investigation starting about the legally gray areas, right? We saw, sports betting coming to sports predicting, not betting, coming to them. I think there's going to be a lot of regulatory challenges to that specific take that they have. We saw Kalshi this week do a partnership with StockX around collectibles. That is also to me I love collectibles. So like this is something that I guess I have kind of mixed feelings on. But it seems like it seems like there is room here for a big mistake. That being said, the flip side of this is like, a Kalshi token, a Polymarket token. I think Polymarket is probably more likely or would come sooner. Like could be huge catalysts. Like that would be, that'll be all we talk about for a month, right? Is like that token. And a really good outcome on there, especially if they could go token into ETF listing really quickly, which it seems like Polymarket is probably the best position to be since they're invested in by the NASDAQ. If they could do something like that, that could really bring a lot of life back. I think we just like haven't had a crazy runner in a while. And like, it's hard to keep coming back to the drawing board for trades in crypto when most of the trades don't work out. But also I think that the quality of companies that have TGE'd this year is just lower than in prior bull markets.
Yeah, that's probably somewhat true. I feel as though the market does just need a sector which runs and it catches everyone off guard. Like you said, it could just be like last year AI became like a big thing for a brief period, and then we kind of moved back into DeFi, it felt like, and then we had on-chain capital markets, essentially all this sort of mini metas. It does feel like we can have that coming back, and some of the best of those happen during periods of real weakness in the market. Like that's when they kind of emerge, isn't it? And then, oh my God, this is going to be the thing that is going to be big next cycle. You know what I mean?
Absolutely. I mean, look, like again, like two of my best trades were tokens that launched in bear markets were Blur token in its first airdrop and Meme Land. Like these were really big wins for me as a trader. Like you could not have painted a worse market that both of those launched in. But there's also like, less noise. And like, I do think that like, another way to view this is like maybe a positive light is Bitcoin went down in price prior to stocks going down in price because crypto traders traded better this cycle and they actually took profits and they actually have cash. And like, what is that cash waiting to bid, right? Like that is like things go down in price because people are selling, but like maybe that's just like, hey, like, a hallmark of prior cycles is like one of the reasons bear markets are so rough is because like everyone round trips their bags and no one has money to bid the dip. Like I do strongly believe that because TradFi was exit liquidity for a lot of the trades this cycle, that like the crypto native audience has more stable coins and cash than they've ever had and have had in prior bear markets. And I think that like the big question is, and again, this is why I would pose to you is like, all right, let's say there's a 30% candle down tomorrow on everything. What are you buying? Right. And like, what is your answer to that? And what do you think other people's answer to that is? Right. And I think that is very, very key. Like I'll tell you, like there is a price of fart coin where I'm just putting a bunch of money in a fart coin. Like that is a no brainer trade to me. And like, maybe it goes to zero, but like that price is very low, by the way. That price is like, $20, $30 million market cap on Fartcoin. Like I'll put in size, right? Like that makes sense to me.
Yeah, I think the one that I've been drawn to most recently has been the privacy style coins. That they've been a little bit weak even today, which is why I was looking at them again. But or things like Hyperliquid, just because I feel as though
Oh yeah. I mean,
there's a narrative there for Hyperliquid, and maybe even AS has been relatively strong throughout this whole period. Actually, it's been probably the strongest altcoin, if I'm honest. But
yeah. I mean, like if you are in
yeah,
this market, there should be a price in your head where you bid Aster and a price in your head where you bid Hyperliquid. Like if you don't have those prices in your head, we're like, then you're just doing this wrong, I think.
yeah, I'd agree. I actually think that's not a bad way to consider these sort of periods. Is have a short list of names that you think are going to be interesting, and then look for breakouts, or if you want to have a line in the sand levels, you can as well.
A good way to identify that for yourself is on days where like Bitcoin comes back up and we see these rallies, and like what are you feeling FOMO about not buying? Like that should really you think. Because the other thing that's kind of funny about this period is like, companies don't tend to ship as many announcements or like new things like over periods of time with this high volatility. And so like, nothing should fundamentally change about any of these companies over these periods of time. That's all that substantial. Like really what you'll see is like sentiment around them. What do you think matters? And like, where do you think the market's just wrong? Like that is the thing that just like really, really matters here. But I agree. Aster is like suspiciously strong.
Yeah. I've definitely been surprised by it. It feels, obviously the volumes are still pretty high. There's been a lot of questions around that, but the age of the perp decks feels like it is kind of upon us. I do think that they are going to be with us as one of the main things throughout the next few cycles. So maybe people are looking forward at these sort of things expanding into tons of different asset classes, and it being the main trading venues for lots of different assets, I think, globally.
Yeah, I think like what's your price on Hyperliquid where you go all in, right?
I think if it went down to around 25, I would be interested. Another 20, like Hyperliquid, I think is already interesting right now. But if it goes down to 25-ish, like that spread versus some of the other L1s, I think it's very interesting around there.
And you really consider Hyperliquid like an L1?
Less so, obviously. I have a similar sort of take to you in that I think you have to understand what it is. But I think it's going to be, I do think Hyperliquid is going to be one of the main venues for trading perps in the future. I just feel it, and I think perps is going to be, you want to have exposure to that as a product. So my view is that Hyperliquid is going to be a good buy for that. Even if it's not an L1 trade, I do think it's going to be a good trade for being a perp venue.
Yeah.
But
what other coins are you?
I would start with
with
Bitcoin. I would start with this with Bitcoin. Like Bitcoin for me, I mean, obviously it looks like I own Bitcoin right now. Like I've been, it's still the asset which I kind of moved into as everything sold off, and it's continued to sell off. We're actually rallying a little bit now, like 85, 86K right now. So decent spot, and looks like stocks are rallying. So Bitcoin's always going to be the one that I think you need to work out where that bottoms before you can necessarily start charging into a lot of these other assets. Worryingly, like we just keep on breaking through levels of support. I would have guessed around 75K would be the main level of support, but we're now maybe this 80K level, which we just touched, is going to be seen as like the short-term support level. So maybe trading it around that would make sense.
Yeah. I mean, I think like to me the really big like the really big bottom of the market signal is if we go to pre-Trump levels, right? Like if we ever break 70K, like that's when I start really like all the cash I have squirreled away, all the that's when I'm just like, all right, do we mortgage the house? Like that's the thing to me of like this to me is volatility. This is not like a crash. Like a crash is we are under pre-Trump levels.
So what was that? That was
like
65?
65, 70, yeah.
Yeah. I would agree. If we went down there, that's a shove.
My house is going to shrink in size. I'm going to be wearing much less nice clothing. we're gonna see. I'm gonna be eating ramen. We're just gonna go. Like that to me is the like you shove moment, right?
Yeah.
Which was like the last time that I felt that way was the FTX collapse, and like I don't know that we get an FTX collapse style event this cycle. As a matter of fact, I think that a sign of maturity is that we are even discussing that we might not, right? But it certainly would be that if we didn't. But that was like a, sell the shirt off my back to buy the coins kind of moment. Like, I don't know, like ideally we don't get that this cycle, right? Like that's not necessarily the healthiest thing. But if we do, like the moment to do that is very quick. You don't have a lot of time. It is also a very emotional moment because you probably lost a lot of other money. And so like it is of vital importance as a trader to have a plan for that moment if it happens and to execute that plan and like just, be very clear on it.
Yeah, I certainly think that last time there was more leverage in the system. This time there's DATs, which is like a different sort of trade, let's say.
Yeah.
But I do think it's worrying. But the idea of like it's going from 69K to 16K, like you said, like that requires a real liquidation, in my opinion.
We blew up all the leverage on October 11th. And
yeah. Like, that's true.
Like no one has any money. That's why there's no leverage.
Right, guys. I want to get to some questions because I know it's been a real week. So if you want to talk about anything, just put them in the on the Real Vision website or on X or on YouTube. Alexander on the Real Vision website says, "Are market makers forced sellers due to Binance using the internal oracle that failed, causing a damaged balance sheet for some large market makers?" Yes. Very, very obviously, I think that 10th of October wipeout on Binance, or was caused by Binance Oracle, affected a number of different market makers. There was talk for a while about them suing Binance. I don't know where that's kind of gone. They publicly denied it at the time, but there's been a notable drop off in the liquidity of altcoins in particular since that happened. So I think it did leave a mark for sure.
But I wouldn't say that. So I think there is a sentiment that so even though market makers lost money, market makers make a lot more money than you think and are a lot more responsible with your money than I think with their money than I think people think. And so it's kind of like even like it's reminiscent to me of when Bybit got hacked for $2 billion and it was just like like we just have $2 billion. It's like I think there's a lot of people who are fear mongering around like, oh, Wintermute's insolvent. Like Wintermute could lose a lot of money before.
Yeah, Wintermute's not insolvent.
Yeah, that's not the case.
I'd agree with that. What would be the motivation for not releasing inflation data? Seems that if numbers were good, Trump could point to it as a win, and if they miss, it would lead to a cut. By not releasing, it's creating uncertainty. I do agree with this. I don't even know if there's just like a lack of faith in the numbers. That's why they're not being put out. Like maybe they feel as though this period, because so many officials were off, they weren't able to get good readings on a number of these different things. So I honestly don't know the answer to that. What I do agree with is that by not releasing, it's creating uncertainty. We've just spoken about that, like how 50-50 the Fed seems. That doesn't normally happen. Particularly, like the Fed likes to tell the market what it's about to do or give pretty clear guidance within weeks of a Fed meeting what it's about to do. And it doesn't seem to be the case right now. And part of that is slightly conflicting data, but part of that is a lack of data. And I don't think it's helping.
So like, okay, the like tinfoil hat answer to this, which I think is kind of funny and we're talking about, is like one of the things that is coming up is a midterm election year in the US. And so like one of the sentiments that I have heard is like, hey, stock market was doing way too well. Like it could never do better. Like we need to cause uncertainty in the market intentionally now so that when we're closer to midterms, we can save the market and it's bullish for like the current like party in charge. I don't know. Like, again, this is very tinfoil hat on like, is that what's happening? But like, there's two things. It's like either this is just like sheer incompetency, which is, I think, more often the case than people think. Like there's a lot of conspiracy theories that are actually just like, hey, people are just bad at their job or like it just didn't happen. Or you're like, why would someone want uncertainty, right? Markets definitely don't like uncertainty generally. We know that for sure. And, you can justify why a market might want uncertainty. But, I would actually think the market wants uncertainty answer is optimistic because it is the more bullish of the two answers because it's like implying that it is causing uncertainty to have some sort of narrative around when certainty is gained being bullish.
Yeah, I think that's fair. Okay, is Bitcoin just trying to build a bottom right now? I have not seen that. I think Bitcoin right now has just been smashing through levels. The first level that we've seen a decent bounce on is right now, where we've seen it bounce at 80K. Maybe it will start to try and form a bottom around 80K. For now, it's just been consistent selling. So hopefully this is the first attempt at building like a consolidated level, which will be defended.
Yeah, I mean, I think it's pretty obvious. Like if you look at this chart, like it's either going to continue to range down in a pretty much a straight line as it has been, or some catalyst is going to send it one way or another. And we know there's this very clear catalyst to the upside or downside coming in the upcoming rate decision. And so like it's like there's two lanes of time you should be looking on. It's now till the next Fed meeting. And then it's like after that, right? Now to the next Fed meeting, I see no reason why it should bounce or drop significantly. Like post the next Fed meeting, it is very deterministic by do they cut rates or not.
Yeah, I think it's fair. Jory Zale on YouTube. How would you price tokens in this environment? A lot of stuff is at bear market lows already. It's bear market lows in terms of price, but as Spencer said, some of this stuff, market cap, you'd be surprised at the emissions of a lot of these tokens. The crypto total market cap is still at, let me just bring that up, just shy of 3 trillion.
Yeah, I would disagree with the premise of this question. Like market cap's 3 trillion, Bitcoin dominance is not that high. Like it is certainly true that it is many coins are not at bear market lows. I would say coins that are at bear market lows right now are probably not the coins you want to be buying.
Yeah, I wouldn't think that this is forming a bottom in altcoins necessarily. Like we went in April, we were at 2.3 trillion. We're at 2.9 right now. So we're actually up since then. So, and as Spencer said, Bitcoin dominance as well at that time, back in March, April, was at 65%. So, and now it's at 59.
Yeah.
So altcoins have actually outperformed Bitcoin over that period.
Well, not necessarily, because there's also been a lot of new altcoins issued, but
yeah, that's fair. That's fair. But by and large, if this is a bear market, or if this is going to be, let's say, a sustained chop, I wouldn't necessarily say that like altcoins is the thing to price. I would always be looking, like I said, look at Bitcoin first. Bitcoin needs to stabilize for the market to rally. There's been periods even in the last week where altcoins have rallied and then Bitcoin hasn't, and you just know that isn't going to last. Like if Bitcoin was to go back down to 80K right now, every single one of these altcoin bounces would get rugged. So focus on Bitcoin when these sort of things happen, and then you can kind of work out when to price the rest of the market. I think we gave a rough list of the ones that we might be interested in. I think for me, it's perp dexes, privacy coins, and then there's culture style coins, I think, which I think normally tend to last throughout the cycle or can have interesting runs back up.
Yeah. I think that's similar. Like a trade I did earlier, over the last cycle was like dick butts, right? This is not a trade that people think about ever, basically, right? But like, I just like dick butts. They seem culturally relevant. They were half an ETH. I bought a bunch of them. They went as high as 1.5 ETH. They're at 1 ETH now. ETH is also up. Like that was a great trade, right? Some of these wins, like if you're buying, this is why I'm saying like Farcoin to me is really interesting, like, 20, 30 mil market cap, because it's like, you don't need a crazy run to a billion or multi-billion dollar run to make your 2 to 3x on that trade, right? Like the amount of liquidity that you need to win that isn't that high. And like, if it's something that you still think about from prior cycles, it matters. Like we saw Uniswap have a great moment. We saw like more so than privacy coins. Like to me, the Zcash run is not a privacy. So this is my contrarian take. It's like Zcash is not a privacy coin run. It is a old token run, right? There's definitely a sentiment, which is like new tokens that still have large venture unlocks are kind of hard to buy. And so like, therefore Zcash, we saw a Uniswap pump that was really significant recently, right? Like, these fully vested, fully floating tokens are just like like that might, like that to me is a thing that is surprising to be a narrative, that we're seeing 2017 cycle tokens, 2016 cycle tokens, like 2014 cycle tokens, like coming back, right? Like that's where if I was looking for the next, like there's definitely a hunt now for who is the next Uniswap or Zcash that like is run up in this way.
Yeah, I mean, I've seen that. We've seen that a few times, really, haven't we? XRP was a similar sort of example. Like, I'm never going to say some of these old narratives die, particularly ones with diehard communities around them. They oddly can stay on and come back fairly strong at random moments.
Yeah.
Maybe that's what the next big bull run is. Okay, I think we'll call it a day there, guys. I hope you've had a okay week. Hopefully, this bounce, whatever it is sustained for a little bit longer. We'll be back again next week, obviously, same time. Spencer, thanks so much for coming on what is a tough day to come out and give strong views. But I completely agree with what you said. Like, staying engaged in the market at times like this often can lead to the best trades.
Yeah, absolutely. Thank you so much for having me, Mando. And I'm always happy to come on even in the toughest of days, because I'm not someone who goes away in bad weather.
Yeah, me neither. Okay, guys, we'll see you again next week. Thanks a lot for tuning in.
Peace.